Hello, this is Cesar. I am a U.S. Tax consultant focusing on uh, U.S. citizens who live outside the U.S. Today, I will be talking about sourcing of income in my new video series of U.S. international taxation. This is part one. This is not tax advice. If you want tax advice, email me. Sourcing of income or earned income in this case refers to where the income is earned and where it's going to be taxed first. It's important because we need that to figure out credits and exclusions, and for non-residents, figure out if they owe any U.S. tax. All U.S. citizens have to file tax, and we pay taxes, but we get credits from taxes paid to other countries and other benefits. So that's why this is important. From the U.S. perspective, there are two sources: from inside and from outside the U.S. Or there are mixed, but that's just a combination of these two. So for earned income, where the client is, where the company that hire you is, where the money comes from, or even where the money ends up does not matter. So for example, if Carol works in Spain and her clients pay her from a US bank account to her US bank account, where the money never leaves the US, basically, it doesn't matter. The money is foreign source income or it's not US income. Specifically Spain. So Carol probably has to pay taxes in Spain first and then calculate her credit in the US. So strange. A lot of people have this all wrong. Okay, they think if you get paid with a W-2, you have to pay tax in the US. You don't have to pay taxes to the country where you live. Like wrong, 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 wrong. Where you earn the money, that's where it's taxed. Generally, there are exemptions to everything, but generally, it's not the same for all income. So for example, interest is sourced where the payer is. So if you get paid interest from a bank in New York, it is US income. As I said, this is important because it's needed to calculate tax benefits or even to pay the tax. Be aware, treaties may change all of that. So I spoke about the general rule, but there are treaties with many countries that can change this. This is a topic for hours. A tax treaty can take hours to break down. So obviously I'm not going to do it here, but you can email me with any questions you have. You can find all this information in Internal Revenue Code 861 to 863 and 865, or email me if for some reason you do not enjoy reading the Internal Revenue Code. What is the US? It depends. Believe it or not, it depends. Congress can define anything as anything they want. So depending on the purpose, they have different definitions of the US. I'm not gonna go into this because my head might spin and probably your head will spin. Just be aware. For most people, Spain, Germany, Mexico, that's outside the US, but you know, there might be situations where we have to look at it and see if you are really outside the US or not. Sourcing of earned income, as I said, it matters where the service is done. So, for example, if I am hired in New York, or let's make it more complicated. I'm hired in Mexico to do work for a company in California. I move to Spain, I do the work in Spain, I travel to Italy, I meet the officer of the company, and I get paid cash in Rome, drinking cafe next to the Coliseum. The income is sourced where? Try to guess, and I show you. 1, 2, 3. Spain, that's where I did the work. Sometimes a foreigner, and when I say foreigner, I mean not a US citizen, not a green card holder, not someone who is in the US 183 days. Okay? If he's only in the US temporarily, he does not spend there more than 90 days, and he doesn't earn more than $3,000, he don't have to pay US tax. But if any of that is broken, he has to pay US tax as a non-resident. For example, Alfred is German and he does a project and he gets paid 60,000. He spends 8 weeks in the US, and in total he spends 20 weeks. 40% of his time he spent in the US, he needs to pay tax on 40% of 60,000. What if you work in the US and in Spain? You allocate. Usually, time is not mandatory to be used, but that's what is usually used. You can use anything that correctly allocate the income. So for example, you spend 3 months in the US, and then you move to Spain, and you make 100,000 a year, 25,000 in US income, 75,000 in Spanish income. This is just an example, but Spain might want you to pay tax on the whole thing. I'm not saying Spain does. I'm using Spain as an example of a country. You will have to check the Spanish law, okay? And I don't think that Spain does this because before you arrive to Spain, you are not a Spanish resident. And this is my email again. And I took this presentation from my IRS presentation. So this is directly from the horse's mouth. And here is the IRS presentation. If you want it, send me an email and I'll send the IRS presentation to you. Talk to you soon.